the word on Wall Street. Top investors watching your money as the major indices are in uncharted territory once again this morning. Joining me right now is Bulltick Capital Markets chief strategist Kathryn Rooney Vera, Brigg Macadam Limited founding partner Greg Swenson, and Michael Lee strategy founder Michael Lee. Great to see everybody this morning. Thank you so much for being here. Kathryn, kicking things off with you on this first day of November for markets. We got a strong performance underway. The Federal Reserve will kick off its two-day policy meeting tomorrow. Chairman Jay Powell is expected to announce a taper timeline. As we go into that meeting, what are you thinking in terms of the Fed scaling back the purchases as early as this month, with the Dow Industrials right now showing a triple-digit move, opening at a record high this morning, likely?
Right. Yeah, the Fed is going to do exactly, Maria, what the market expects it to do. The Fed is a market pleaser. I can't imagine a scenario where they surprise either to the up or the downside with regard to the quantity of asset purchases that they plan to taper starting this week. What I think is happening, though, Maria, is the market is losing confidence in the capacity of the Fed to remain as lenient as it has intended to do so. So the market is pricing in, of course, rate hikes coming as soon as July of next year. And what we've seen, Maria, last week is a flattening of the yield curve in the 2s and 10s region, unlike anything we've seen since the middle of the pandemic of last year. So that tells you that the market is expecting a slowdown in economic growth and higher inflation, forcing the Fed to hike sooner rather than later. And I think that's right.
So do you think they'll start hiking rates in 2022 then, Kathryn?
Yes, they're going to have to. Well, at least they should. And if they do, and I think we're going to get 2 rate hikes, then that's the right course for the Fed to take.
And then there's all of this spending in Washington, Greg. House Speaker Nancy Pelosi is now pushing for a vote on the president's social spending bill, as well as the infrastructure bill, as soon as tomorrow. Treasury Secretary Janet Yellen said that these bills will be anti-inflationary. And she said that they would actually help to lower costs. I don't know how she gets there. Obviously, all of this free money, whether it be from the federal government or the Federal Reserve, has stoked inflation. So you're talking about another $4 or $5 trillion expected to stoke inflation again. She says, no, it's going to lower costs. What do you think?
That's hysterical, Maria. And Kathryn brought up some great points about what the Fed is able to do, but you also have to look at this reckless fiscal policy. And so if any of this social spending plan is actually passes, I hope it doesn't, and there's a good chance that it won't. And they have, taken some of the more destructive items out of it, but there's still a lot of economic destruction in there. And as far as inflation goes, it's amusing to hear Janet Yellen say that, when in fact, welfare and entitlements will basically deter work. It's surely not an incentive to work. And the tax and regulatory burden also reduces incentives to invest. So, whether you believe that this inflation is transitory, which is a bit of a stretch given that, the PCE index is the highest since '91, employment cost index is the worst since 2001. The University of Michigan numbers came out Friday. That's, down from 101 in February of 2020. It's now at 71.7. And then, consumer inflation expectations at 4.8. So inflation is real. And the last thing you should do, given those numbers and future food price increases coming from the natural gas prices, the last thing you should do is tax and regulate the supply side even more, and then overstimulate or continue to overstimulate the demand side with these massive transfer payments.
Yeah, it's pretty incredible that they want to push this through, even as we're living this inflationary scenario right now. Mike, I got to ask you about some of that inflation as it relates to oil. I've got a Goldman Sachs report here, and Goldman sees oil market deficit running at 2.5 million barrels per day. Goldman sees oil bull remains intact, affirms Brent at $90 a barrel target. The Journal is out with a story this morning saying that investors are buying oil as well. The cost right now in terms of crude oil, just below $84 a barrel. What's the impact?
Look, this passes costs on to everything we do across the entire country, particularly those at the lower spectrum of income, people that have to drive a long way to go to work, the truckers driving across the country, of which there's a shortage of. So look, we are in a crux of major problems going on right now with a lot of logistical problems causing price spikes across everything that we see and do. And at the helm, you have Mayor Pete, who has no real accomplishments, is basically sitting in his position for political favors. And you have a Biden administration waging war on fossil fuels. They could easily fix this by releasing the strategic petroleum reserves, reopening the Keystone Pipeline, and there's a lot of other ways they could tackle this, but they're choosing not to.
Yeah, and that collectively is pushing prices up. And you're talking about gasoline being up 40% or so over the last year. There's a buying opportunity there for somebody in terms of buying oil, and that's what the Journal is saying people are doing. Great word on Wall Street. Kathryn Rooney Vera, great to see you. Greg Swenson, thank you so much. Michael Lee, you're sticking with us all morning. We're happy about that. Have a great Monday, you guys. Thank you.